Alright guys, welcome back to the channel. After yesterday's minor flash crash, Bitcoin's now up $2,000. I think the majority of people are missing out on their opportunities here. We've seen higher low after higher low after higher low, stock markets at all-time highs, real estate at all-time highs, commodities at all-time highs, and the masses are missing out on their lower priced opportunities. Now, after this particular date, it seems like things get a little bit too late, or in better terms, way too risky. Let's not get involved in the extreme risky business of trading and investing at the wrong times. That's what I'm going to look at in today's video for you, along with updating all of the analysis today across Bitcoin, crypto, stock markets, and real estate. We've got Solana and Sui, some of the favorites to look at today, so make sure you hit the like button. And if you're new to the channel, hit subscribe now, as each of the day's analysis builds upon the previous day's analysis. It's your home of macro cycle analysis. Now, links in the top of the video description for TIA Premium. Flash sale goes out today. Subscribe, you got the free weekly report. More on that later. Let's kick it off with the S&P 500, get through the traditional markets, and then look at Bitcoin and cryptos. So the major cycle that I'm looking at here is the election cycle, the US presidential election cycle. To recap it, we're in October. Obviously, in about less than 2 weeks' time now, we've got the election coming up. From that point, markets in this bull market, since the lows of 2009, have basically not looked back from that point. So there's the first timing that you don't want to miss out on. From the market sentiment data, the market sentiment analysis that we've been doing, there is a lot of signs that people are still waiting on the sidelines. We've seen higher lows upon higher lows. And if I take this off logarithmic, you can just see the massive extent of the move. We've talked about this since 2022, from June, which was this low here, 3,600, October, September, we had 3,500, but pretty much around that bottom, I was screaming to say that that was a low coming into the market, and that basically when you get these breakouts around 4,200, things were on. And from that, we've seen Bitcoin also bottom and also rise up from around $15,000, obviously hitting 74,000, currently sitting at $67,000. So the S&P 500 up around 68% from those lows. And on our monthly swing indicator, this yellow line here, none of the monthly swings have been broken. Some have gotten pretty close, but they haven't broken down yet. And like you can see from the previous cycle, so 2020, that's your election year, running into 2022, the monthly swings were pretty strong. You can blame it on money printing, but essentially the whole cycle's been about money printing. And that could be the unwinding towards the end of the 18-year cycle, the 14 years up, 4-ish years down. Okay, so go back to the previous election here, 2016. It was the Trump election, higher low, higher low. The market went ballistic. There wasn't even a chance for a swing bottom, meaning that the investors and traders were buying up prices at much higher prices than anyone was able to get in at. So basically higher lows upon higher lows, running into this January 2018 top. And of course, Bitcoin's top was December 2017. ETH got into that January 2018. So basically a very clear run up. Then things got a little shaky through 2018. People thought it was going to be the end of a major bull run. It wasn't. And of course, things kept going after that. Go back to the previous cycle, 2012. Okay. Look at all these higher lows on the monthly swing indicator. That's this thing right here. Turn it on and look at where you could put your stops and just keep following the trend to the upside. So there it is there. It broke out into fresh highs. That's the S&P, leading indicator for Bitcoin and cryptos. And then, of course, they also went up with the S&P 500. So much, much higher prices there from the election. So let's take a little closer look to the short term and how things are working out pretty well on point with the seasonality of October. Whether it's in recent years or election years, we've got lots and lots of data here, 20 to 70 years worth of data. So this is the S&P 500. We also saw the S&P 500 drop yesterday, negative 0.76%. It did come lower throughout the session. So top to low, 1.5, pretty decent. And for regular viewers, I hope you are, this here. Remember, we've been following this October volatility, 4 to 5 weeks of a volume fill. And October first red day would then equal a green quarter 4. So that's going to take another 2+ months to get to, but I think we're already starting to see this, and this is working out to an absolute gem of a tea, whatever. Okay, here are the dates. So if you can follow this, you can kind of forecast what happens next, or close to it. I'm not trying to be perfect. Don't worry about being perfect. Essentially, if you understand that there could be times in the month around these similar times where the market drops off, sometimes the cycles follow each other, sometimes they don't. In this case, it's following, so let's keep following it. Then you don't have to be so worried about the market coming down, like prices coming down. Look at the dates on here. So let's start with where we are and then work backwards. Here is the 22nd, there is the 25th, and then a high low here at the 29th. Now you could average these things out, or you could look at both of them, keep those dates in mind. Essentially, there is a bit of a downtrend into this period, which we are currently in. So we've seen the 23rd of October. This is the 23rd of October. What happens here? Well, we've seen lows on the 22nd, and then basically base out until around the 25th, in some cases the 29th. So where are we? Well, 25th would come in on Friday. Next week would be around the 29th. Okay, so Tuesday, and then things start to move up from there. And so to go with the title of the video, essentially, once these dates passed, just looking at the data, looking at history, longer term and the shorter term, there's not often a chance to get back in at those prices. That's all. There's an opportunity to get into the market. There's always opportunities to get into the market. There's opportunities to get out of the market too. But in terms of the prices, just looking historically speaking, I can be absolutely wrong. I'm okay with that. But I'm just looking historically, which we have done for years now on the channel. And basically, there's been higher lows upon higher lows in the face of every single worsening crisis upon whatever crisis you want to have. The prices have gone up. Okay, so here are the swings. This one, it's not confirmed yet. It's working out all right. We're obviously seeing a downtrend into these dates that we looked for. 17th was a peak. What did the chart say? 16th on this one, and then 18th on the election. So the dotted lines, the elections, the solid lines are the recent years, so all of them combined. So if you look at the 16th and then the 18th, well, what's the average? Right in between there, you had the 17th. And that's exactly what happened. All-time high on the 17th. Basically, just looking for a cyclical move at around that point. Okay, so we've got the 17th. What about the low for this area? Well, you could argue this was the exact low on the 2nd. The market did keep to those prices there onto towards the 8th, and then the move happened. So what about the 8th? Well, you had around the 9th, 10th of a bottom. You also had the 9th, slightly higher low here on the 10th. So it was a little bit earlier. Again, I'm not trying to be perfect. And this came out before October was there. So I'm just trying to look at probabilities, right? This is a sort of flow of October's flow. And people are looking for this massive Uptober. The cycles didn't suggest a major Uptober. And I haven't been one to promote an Uptober. I just not interested. I just want to look at what the data has given us here. So far, it's been working pretty damn well. All right, let's keep following that up with future videos, see if it actually sticks to this, and then we start to see prices rise towards the end of October, leading into the election, which then comes back to the bigger time frame stuff, which potentially suggests we keep seeing higher prices from here. We did have that one big scare in August, which you see it put in a higher low here on the swing chart and then closed higher, which leads us over to BTC and the market sentiment. What's going on there? You've got the fear and greed only down to 69, still in greed. We had 71 yesterday, 71 the week before, and it's basically been stalling out here in greed, although Bitcoin did drop that sort of percent overnight, right? We had a couple of grand down and it's bounced back on good volume. I'll get to the TA in just a moment. Just looking at the sentiment right now, still looking pretty good. We're also seeing the search volume for Bitcoin slightly pick up. So last week was 18, the week before that 17, and the week before that 17. So we're seeing a steadying here around 17, 18. The interest has basically flatlined for the search term Bitcoin. What happened last year in October, just before we got that 300% pump, 25 grand to 74 grand, thereabouts, right? What's that, 200%, sorry. it stalled out around 16 and 15. So we got a slightly higher low here at 17 and 18, which you would expect if there is actually going to be some more interest coming through. I wouldn't be concerned if it remained around these mid-teens with the search volume, but I think we're on the verge of one of these. It takes time. People saying, like I said this months ago, I said in March, 4 to 6 months underneath the old all-time high. We're now 7 months. Sorry, I didn't get that one exactly right, but I did say the prices would be down when at the time everyone was saying 80, 100 grand. You know, I can't get these things dead on, but you know, we do our best here. Anyway, moving back to 2020, September, October. Look at that. 11, 10, basically flatlining before it took off into that next boom slightly after the election. Can it happen again? One would think so, just based on at least this 5 years of history. Of course, we can always be wrong. Let's just keep tracking that. Something else that happened again. Guys, I hope you're seeing this, how things rhyme. Now, I'm not looking for exact repeats, just the rhyming here, and looking at the ETF flows. Someone did correct me in saying that this is not on-chain analysis. Okay, that's fine. What I'm trying to get at is ETF flows. If you're basing your strategy following, I don't know, influencers who look at ETFs and jam it down your throat saying it's great things, sure, people are buying. But in terms of a signal, I think this is a fantastic signal to show when there is too much heat in the market, and you might get some short-term movements here. You might get short-term peaks and corrections, right? And that could be also short-term bottoms and rallies, which we've seen throughout this entire piece of history here that we've got with the ETF flow, all this data. Case in point, October 14th, so that data coming through, you got 8,400 inflows, BTC. The highest, you can see that just on the bar, the blue bar here, the highest that it had been, does it beat that? Yep, beats that one there, going all the way back to, what's this, June. Okay, what does that look like on the Bitcoin chart? Well, the 14th is here, big volume up, and that basically flatlines the pricing. So a lot of people are buying at or near the peak. Same thing happens at the lows. A lot of people are selling at or near the lows. That's where you get that increase in the volume of the outflows dropping off. So again, we've seen a bit of a stall here in price, right? So if you're saying the tops there are 66, 67, well, we're at 67 now. Last night we dropped to 65. Basically, the price has stalled at that point, and you're getting some selling, getting less buying happening, and probably things are starting to, the sentiment starting to reset so that you can go on another run to the upside, which leads us to this. And this one here is also a good one in terms of timing. You sort of miss these dates, you miss the biggest runs. And looking at the historical performance here over the last 8 years, next 2 to 3 weeks could be pretty significant ones. This is posted back on the 16th, so 8 weeks ago, but this data has been around, well, you just got to put it together for the last 8 years, 7 years basically, because we're into the 8th year. Well, what does October look like so far? Here is the first, so a drop off, and it's been rising for October. Now we can measure it from the open to the current close. That's a 6.7%, so it's still a rise. Maybe by the end of the month, we get to double that, maybe 10 or 13%. We'll wait and see. Maybe it comes lower and it was just a waste of time altogether. But for now, these particular points have been some of the best times for the market. Then you have to overlay this with where we currently are in the cycle. And 2024 is one of those times where we see stronger prices, but still a lot of people unsure whether this is the time it's going to take off or it's the time it's going to collapse. Something interesting from this particular cycle though, you've got the median line here, and we did have that run up into early March. So there it is, peak around March, and then it's basically flatline from there. Now, I don't think there's enough data overall to hang your hat on this completely, but there are some interesting swings and cycle movements within the price for BTC. So overall, how I could use this, like we talked about how you could use this when others might be expecting the exact movement of a negative 3%, are the majority of the move could happen in Q4. That's basically what the cycle has shown each time. A lot of the move happens in Q4. This cycle, if we go from January, that's what we're doing here. There is the move. So you got, call it 40 grand up to 74. so just short of 100%. It's about 80, 90% of a move. It's come all the way back this year, and we're basically sitting where we were in February, March. So in terms of the cycle here, you can see that there is some of the move, or half of the move, 1.6%. And then at the back end, the last quarter of the year, measuring from 1.4 to 2.2, you got another very significant part of the move to occur. Is it going to happen again? Let me know in the comments section down below. December often looks like a pretty good run. I think a lot of people are used to this sort of Christmas rally and just the year ending off strong. Should we continue to see the price action consolidate here? Well, then that would probably lean towards the market actually moving up if it breaks out. And if it breaks out, it should do it in a strong way because of the amount of time we've spent here consolidating. So it's still yet to be confirmed if it's going to be accumulation. That'll be confirmed when we break out. Or to the flip side, if we break down, well, then this was all just distribution. And I know there's still a lot of people who are on each side of the fence. Absolutely okay. That's the way the markets roll. And of course, we all play our chips accordingly. To me, to my own analysis, I still think this is accumulation. So have a look at where this dropped off to, right to the peak of the top here in August, so the swing top before the market fell away to form a higher low, another higher low here. And then we also have 64K level, so that was the 50%. Remember, we looked at this yesterday, so this one right here. And that's the halfway point to this entire move up. So it still looks like a pretty healthy correction. And if we take a measure in terms of time, you've got about 11 days to the upside. So what about a 50% move to the downside in time? I don't see many people talk about it like this. 5 days, 6 days, there's about 50% move. That would take you out to about 26, 27. So watch out over this weekend, maybe even into Monday, Friday to Monday, somewhere around there for some sort of low if we haven't already seen the low. And that would give you some sort of balanced move, roughly half the time to the downside to what we did to the upside. Just getting my words right there for you. So that's the composite there, looking good. And median daily return per calendar day in October. Looking at the current days, you've got red and red. What days are those? 21, 2, 3, 4, and 5. We are on the 23rd. That should have been a slightly green day. We got a red day. So maybe we're somewhere around these days already. They're some of the, well, basically average days to the downside, roughly 0.005 there. This is for the Bitcoin median return per calendar day in October. So it seems like we're at that pointy end of days down, big days up, towards the end of October, leading into November. So the weekly chart for BTC is still holding up relatively well. Yes, we've got about 4 days left to close out the week, but really Thursday and Friday are our last working days. So the last weekdays, and then the weekends are usually lower volume. So provided we can hold above these swing tops, I'm really looking for about 64 to 65. And ideally above that 66.5K as we lead into the end of the week. That's going to set this up into a pretty strong position and continue on with this weekly uptrend. And I've just got on here something that I'm just showing you guys with the Gann swing indicator is the range. So you've got the range of the swing, and that can help you identify where these moves might end up. You can see you've got a $15.9 thousand move to the upside. You had a 13.9 thousand. We're currently at a 10.6. And if you kind of work out on looking what it's done in the past, you could see that it generally, if it isn't an uptrend, it's going to do somewhere around the teens, 13, 15, 16, 15. It was doing these moves even in the downtrends. There are some shorter ones, but this is, we haven't seen this pattern here where it only went up $5,000 or nearly $8,000 there. So it is possible that we could have another few $1,000s left in this particular swing, in which case that could put the move, let's start at 13, that could put the move at 72,000. And if we went to one of the larger ones, say 15 or 16, that could put the move at 74, potentially hitting a new all-time high within this swing. Okay, the swing could last another few weeks. Then we get into something interesting where you can start to measure the time in weeks. So when could that happen? So this is if you're trying to set up your profit targets, maybe the extent of the move, maybe where the move ends. You can then add on the bar counts. So put on the bar count here, and you're seeing how many bars are in that move to the upside. You want candles, call it candle count, whatever the hell, I don't care. 5 to the upside, 4 to the upside, 2 to the upside, 3 weeks. This is all in weeks to the upside. We're currently into our second week. So just looking at least this section here of the consolidation, 5, 4, 2, 3, possibly another week or so to go in the upside, maybe more if it's a stronger move. And then we look further back. If it's a breakout, look at that one. That was 8 weeks to the upside. Bit of a pullback, 4 weeks, 1 up, 2 down, then another 7 weeks to the upside. So if you think it's going to be one of these stronger moves, then you're probably looking out towards 5 to 8 weeks. If you think it's going to be another smaller move to the upside, well then maybe set your target somewhere around 3 to 5 weeks. And that could give you a nice area to maybe take some profits if you wish, or you want to hold longer, that's fine. But the other thing it can do is help you save money. It can help you from getting into moves way too late. And that's what we did here in February and March. So we're looking at how these moves were getting in too late. You're sort of at 6 weeks here, you're at 7 weeks there. You are getting to the extent of what the market is willing to do in these extreme times. You know, the market buyers, they start to run out of energy. Everyone runs out of energy, and you don't typically see moves go for more than this 8 or 7 weeks, at least in this bull market. So you can look back at each of these numbers. No other occasion was there enough energy in the market, enough greed, if you will. You're looking at all this greed, you know, this market sentiment, wasn't enough there to push the price up for longer than that 7 to 8 weeks. So if you want to sort of save your ass in the market too and avoid that FOMO towards the peaks, because you're seeing the price go up and up and up and up, then have a look at the bar counts. Use your swing indicator and just check out how much longer this move could go, just based on probabilities. That's all. All right. Hopefully it does save you some cash. Let's have a look at the total cryptocurrency market cap, the true altcoin market cap, because it excludes Bitcoin, ETH, and stablecoins. This one's your TIA crypto total market cap, still here holding out 480 billion. Same thing as yesterday, so I don't need to spend too much time here for you guys. Anyway, the long and the short of it is we are still waiting here for any sort of break at it. Still high lows, the tops are coming in, and a good move to the downside, and then basically a slight bounce here on the daily. The time counts at the bottom, about 100, 101 weeks to get to a breakout point, just based on the last cycle that you can see here in November 2020. That's where it started to break through the tipping points. So in terms of a time frame, early December, we're still about 6 or so weeks away. Same deal for Ethereum, which just broke down from those lows, ETH versus BTC, that is, to get out to a point similar to the last 2 cycles. It was about 7 to 8 weeks after the election week. So there's the election week, and then about 7 to 8 weeks later, ETH BTC load. We could be on for something similar like that right now. We're only about 8 to 9 weeks away from that point. It has broken down again. Let's keep watching to see whether it gets to 0.03, so 3% of Bitcoin's value, somewhere around there between 3% and 3.5%. But so far, it's still on that trajectory to get to those lows somewhere in November, December. Leads us over to Sol, which is in the opposite trend. It is up and up in a reasonably strong way. We've covered each of these days very closely, looking at the breakout of $163. I was going to say $1.63. The breakout happened, and when you see these breakouts for a 4th time, a really massive important rule, just like the rule that we use with 3 days. This is stuff that we learned through GAN. The 4th time breakout, this can be typically very, very strong. It's unlikely, right, that you're going to come back and test some of these lows back here at $138. Not impossible, but seems relatively unlikely. The volume has started to come through, multiple days close above it, a break of a triple top, which is a signal within itself. Guys, pay attention to what's going on, because I think the time, it doesn't all run out in a snap, right? It happens over the course of many days and many weeks. And before you know it, you're just seeing higher lows, you're seeing higher prices, you're seeing breakouts, you're seeing increased volume on the way up. Lots of signs to say that it seems like a lot of the buying is happening and less, not no selling, but less of the selling is happening once again. You can see that with Sol BTC, increased volume here on the move up. It's the strongest volume we've had since this move here in August, basically at that low. and it's breaking through 50% levels of time and time again. It's not confirmed yet above this one, but we're getting there, and it's broken through this previous top. Leads me to SUI. SUI hit a new all-time high and it has corrected. Now, again, extreme volume here, guys. Look at that. And then, yeah, we've got a few days left to go on this week, but the volume seems to be dropping off as the market drops off. So a bit of profit taking happening here. Now, if you are interested in SUI, which I think a lot of people are, you can see the search results for SUI are pretty damn high, and videos, anything to do with SUI, people are interested in. So I'm not saying that this is a top and an end to SUI. I think this is going to be an interesting one for this cycle. Now you can see the corrections here. If you just draw your eye to the percentages, the pullbacks on the weekly swing is the most important to have a look at right now. 30%, 25%, make this a bit bigger for you. 22%, this one's another 20 odd percent, 24%. Have a look at that there, 20-ish percent. So that's telling me something. There is a chance of 20 to 25% and then a lower chance of 30 to 35%. So we're at the 20% now, this pullback. What if we got to 25? Okay, you're looking around $1.80. If we got to the 30 to 35, $1.65 down to about $1.50. So this is where you might get. This one here is a lot higher chance. So it's up to you how greedy you want to get into the market. Do you want to try and get in around $1.80, $1.90, or do you want to hold out for the $1.50? What I would do is have two positions set up. One around there, one around lower, just in case it doesn't get there, or in case it does get there, then of course you can get in. But there's no guarantees that it goes that low. Just looking at the results here, in terms of the corrections, well, SUI can do 30 to 35%. More often than not, in these grinds to the upside, it does 20 to 25%. And so far, it's like dead on that right now. So you make your own call there. SUI BTC also getting towards these highs, having a bit of a pullback at 25%. So getting close to those corrections now. Go back and measure these for yourself if you're looking for an entry point so that you're using some sort of plan. If not, you can just guess it. You can do what the hell you want, right? But I'm just trying to give you some ideas here to work your probabilities. And on that, we have that sale for TIA Premium. If you want to get your plan set up before everything starts to take off too much, subscribe here and the sale will go out in the next 12 hours. So make sure you're on board with that. Plus, you also get the free crypto and economic report that comes out once a week. If you don't like it, you can always unsubscribe in the future. All right, guys, that's the update for today. Lots of interesting stuff happening right now, even though the masses still aren't here. They're not searching for Bitcoin. They're still not searching for cryptocurrencies. I think that is going to turn around, especially with what we can see with the trends with the strong stuff. Stay tuned, like, subscribe. See you guys back here at the next one. Till then, take care and peace out.